Depreciation, will it come in the lease? No. Why? Because the asset is not yours. The asset is somebody else. You have taken only lease. Every problem, they will only give you PV factor, nothing to worry. So if it is not given, simple procedure, 1 divided by 1.10, you will get your answer. Residual value you will not take here. Why? Because there is a lease fund. The asset is not belongs to you. Again, PV, just we are supposed to show the PV factor, but we are not taking anywhere. A warm welcome to one and all. This is your ALsir here, lecturing Vidhyaashram First Grade College, the Temple of Excellence. And now we are discussing your session 5, unit 4 of corporate tax planning. Under corporate tax planning, we are discussing topic called your own fund or lease fund. We are spending much time on own fund and lease fund. Why? Because there is a compulsory question for your 15 marks. That is the reason we are spending much time on this particular topic. Your agenda is very simple. We are discussing your own fund as well as lease fund. So your questions will be like this. Cost of the asset under construction is rupees 8 lakh. What is the cost of the asset? 8 lakh. Life of the asset 5 years. Life of the asset is 5 years with the residual value of 50,000. Remember, residual value, it is nothing but scrap value. Rate of depreciation 15% and we have additional depreciation of 20%. Is effective marginal tax rate is 26% and the assessee has two alternatives. Which are those? The first one, purchase the asset out of his own fund. To take the asset on lease fund, he can go for own fund or else he can go for lease fund also. Now, so own fund and lease fund, 2,20,000 per annum payable at the end of every year at lease period. One he can go for normal one or else he can go for lease fund. Now, select the best of the options from the tax planning point of view. 15 marks, concentrate. Exactly same type, only numbers will change. Now, own fund method. The years are given 0, 1, 2, 3, 4, 5, 6. So what are this thing? WDV of cash, depreciation, present value of tax saving, present value of net cash outflow. Now we'll go one by one. Here we start with how many? The life of the asset is what? 5 years. The life of the asset is 5 years. Now your actual problem is 1 to 5. Whatever 0 and 6 we have written, that is additional information. Now first column here, WDV, depreciation, PV of tax saving, last one PV of net cash outflow. Now 0, 1, 2, 3, 4, 5 and the 6th year only for your calculation purpose. So 6th year we don't have, but only for your final calculation. I'll tell you why we need this. So for that reason we have added year 6. Now, so we have 8 lakh as your investment. Your total outflow is 8 lakh. This is in what? Own fund. Then, so what is the depreciation? As you know that 15% additional depreciation. 15 plus 20. This will be how much? 35%. 15 plus 20, it is how much? 35%. Now, so we got 35% in this. After that, now 8 lakh you have, 2,80,000. How do you calculate this? Simple one. Take 8 lakh. What is the calculation? I'll calculate for first year. 8 lakh multiplied with 35%. How much you will get? So 8 lakh multiplied with 35%. I got 2,80,000. So 2,80,000 is your answer. How do you write this one? This minus this. 2 lakh. So 8 lakh minus 2,80,000. I got 5,20,000. Your answer is 5,20,000. So from your WDV, you minus your depreciation, you will get WDV for next year. Then take 5,20,000. What is the depreciation? Is it 35? No, it is only 15%. First year we have additional of 20%. From the second year onwards we don't go for additional. In this what? Like 5,20,000 multiplied with 15%. I got 78,000. Yes. I'll do the calculation. 5,20,000 multiplied with 15%. How much you got? 78. Then from this you minus this. From this you minus. From this you minus. From this you minus. Hope you got it. So up to this we do depreciation. Sixth year we are not doing depreciation. Reason is the life of the asset is only 5 years. But what is the closing WDV? For that is a reason 3,19,345 minus 47,902. Your answer is 2,71,443. Hope you got it. Yes, good. This is all about your own fund calculation. Now we'll go for next one. So up to this you are clear, completed? Yes. PV of tax saving, depreciation into PV into tax rate. How do you calculate? Simple one. So take 2,80,000. I'll show you the calculation. 2,80,000 multiply. What is the PV factor? What is the PV factor? The PV factor in this they have not mentioned. I think it has to be mentioned. It must be there in the question paper. So I'll give you what is the PV factor for this. So 2,80,000 multiplied with 26%. Yes, the PV factor is 10%. What is the PV factor? I'll add one more. PV factor is 10%. So how much it will be? 0.909, 0.826, 0.751, 0.6. I'll check how much it is. 0.621. So it will be like 0.682 something it will come. I'll calculate and I'll let you know. So how to calculate PV factor? 10%, 1 divided by 1.10. That is only a PV factor. 1 divided by 1.10. 1 divided by 1.10. I got 0.909. Multiply 0.909. I got 0.826. Yes. 0.682. Okay, so these are your PV factor. Every problem they will only give you PV factor, nothing to worry. So if it is not given, simple procedure, 1 divided by 1.10, you will get your answer, that is 0.909. Second one, 0.909 multiplied with 0.909, you will get this one. Multiply with 0.90, you will get this. Just multiply 0.909, you will get all the PV factor for 5 years. Now, what is the first year PV factor? 0.909. 0.909 multiplied with, what is the tax rate? 26%. You will get 66,175. Similarly, you will get 16,000, 12,000, 10,000, 7,000. What is the total? 1,13,613. That is what your tax saving. Hope you got it. Yes. So in this table, why did we do this table? To find out your tax saving and closing WDV. These two only we required from this table. Clear? Yes. Next procedure. Already I told you the procedure, very simple. You have to start with, don't see this table. I'll give you a shortcut. You have to go with your own fund. Own fund. Your outflow. Outflow. Less minus tax saving. minus PV of residual value minus WDV minus residual value. So these are the calculations you are supposed to do in this. What is your actual one? See, your net outflow 8 lakh. We have taken 8 lakh. Less tax saving 1,13,000. See, your 1,13,613. 1,13,613. This is done. Next, how much you will get? You will get 6,86,387 minus your PV of residual value. What is your residual value? We'll go for that. Residual value in the question 50,000 at the end of 50th year. What is the PV factor of 50th year? 0.621. 50,000 into 0.621. 3150. 3150. Done. What is the last one? WDV minus residual value. WDV minus residual value. So your WDV 2,71,000. Yes. What is the residual value? 50,000. Whatever answer you get into tax into PV factor. Into tax into PV factor. If you do this calculation, you will get 35,754. What is your final answer? Minus everything, you will get 6,19,583. So these are the cash outflow in case of own fund. Hope you got it. Good. We're done with your own fund. If you go with the own fund, you're supposed to pay. You're supposed to outflow 6,19,583. What about lease fund? We'll go for lease fund. Under lease fund option, computation of PV of net cash outflow in this lease. First year lease, second, third, fourth, fifth year lease. Depreciation, will it come in the lease? No. Why? Because the asset is not yours. The asset is somebody else. You have taken only lease. I'll give you a simple example. You are in a rented house. Will you pay property tax? Will you do any repair for that house? No, because that house is not belongs to you. You cannot claim even depreciation. Similarly, this has to be taken by whom? Only owners. So under lease fund, depreciation concept will not come. Now, your lease amount into PV factor like 2,20,000 multiplied by 0.909. You will get this. So add everything. You got 8,33,000. Then your tax multiply. This is already done. Don't calculate again. So your answer multiplied with tax is equal to this answer. Hope you are clear. Again, PV, just we are supposed to show the PV factor, but we are not taking anywhere because already you have calculated here. Whatever answer you got, multiply with tax. Multiply, 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 multiply. Then, so this multiply with this, you will get this. This multiply with this, you will get this. Like this, you're supposed to do. Now, in this table, which total we need? Simple one. Total of this, total of this. This minus this is your answer. Clear? This minus this is your answer. For that, if you have any residual value, yes, you minus that, you are done with the problem. Now, see, 8,33,000, yes, minus 2,16,000, yes, you got 6,17,12. So 6,17,12 you got. Residual value you will not take here. Why? Because there is a lease fund. The asset is not belongs to you. The residual value will not come to you. So your answer will be what? This minus this, you are done with this problem. Now, if you go with own fund, 6,19,000. If you go with lease fund, 6,70,000. Which is better? This is better because less cost. Accepted, rejected. So these are your information. I'll go back to your previous slide. Please take screenshot. Your problem, your solution part, your solution part. These are your lease fund option, your final result, conclusion. So in your examination, conclusion is very important. Why? Because 2 marks is given for conclusion. So please work out all this problem. Thank you.